Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Thirumalai chemicals, for which a lot of queries have come in, and I would like to understand here whether it is a good buying opportunity after the stock has fallen a lot from its peak of 2018. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about Thirumalai Chemicals. This was established in 1973 and they produce phthalic anhydride and malic acid. And their presence in more than 34 countries. So basically, it is a company that exports chemical compositions worldwide and around 30-35 countries. It is not a very small company, although from market cap's point of view it is a small cap. They also produce fine chemicals and fumaric acid, and basically these chemical products are used in food coloring, beverages, product coloring, etc. So they have it has multiple use, and their products are actually raw materials for coloring of products, as I mentioned, in different industries. So basically you can say it is a consumption ancillary play, but then as we have seen in the chemical industry, there is a lot of you can say a lot of stuff going on with exporters, with other countries exporting into countries like Europe and US, and with the kind of issues taking place with respect to Brexit, etc. This It is not that easy to invest in such companies. The numbers basically year on year on the September quarter numbers, the sales have been down 30% and the profits have been down 78% on a quarterly basis, majorly due to the high raw material cost and the inventory being piled up in the stocks. And the stock is down around 72% from its peak of 2018. The margins have declined sharply, and this is quite obvious with respect to what has taken place with the kind of profitability it has had before in FY17 and 18, and the promoter holding is low, around 40% or even less than that. Although there is a good array of institutional investment or institutional holding, but yet the promoter holding has gone down and is not above 50%, as I would like to see in most of the traded companies. So what has been the reasons for decline in the stock? First of all, has been bad numbers of the company over the last 3-4 quarters. The company was producing 15 to 18% quarterly profit growth from FY16 till FY18, and then the profit started to decline, and this was due to a lot of factors. So first of all, China, which used to produce a lot of chemical products and compositions before 2015, it had a ban, or the government banned production of most of the chemicals uh, in that period 2015-16, because of the pollution levels in China, and that has helped many you can say chemical companies here in India. But the things have started to change now from 2018-19, where a number of Chinese, you can say, firms have started with their production, and the factories have started producing chemical products under their emblem in China, and they have started to export these products worldwide. Although it is not at the same level as it was before 2015, but then with a little bit of regulation, the production have begun in China, and that has also hampered the ability to export a lot of products of Thirumalai, so as well as other companies, and that's why many a number of you can say chemical companies right now are trading at below 52-week low or near to its 52-week low, around that, and not to their highs. This is because of the concern that they might not be able to export as much as they were doing before. A global slowdown is another reason why the stock has fallen, because people now understand that it is not the same type of you can say buying environment in Europe, at least because of the Brexit scenario and the political confrontation going on in Eastern Europe. So in that regard, because of the slowdown and because of the sales going down in Europe, and partly in US because of taxation, things are not the same as it was before for Thirumalai chemicals. Small cap sell off is another reason. We have seen how small and mid cap across the board has been sold into by people because of the probably the scare of ASM, scare of the management, and management defaulting. There have been a number of cases, not in Thirumalai but in other companies, of you can say promoter pledging a lot of shares, as well as auditors resigning, and a lot of things going around with respect to the numbers published by small cap companies. And all the small cap companies have been painted with the same brush, and that's why I put up that video on multi-bagger stocks, because there are number of shares which are trading at lower than its intrinsic value, and yet are very good to buy for a 4 to 5 year time horizon. So small cap sell off is one of the major reasons why Thirumalai has also got sold out, but the numbers have not been great either. And the numbers have been bad because of high raw material cost, as I said, as well as the prices of phthalic anhydride, which used to be very high, so that they can sell the product at a higher levels. That has also tapered down, and not quite at those high levels as they were in 2017 and 18. So you have to take that into consideration, that such chemical companies are more of a commodity play as well, because if their chemical products sell for a high value, then they are going to make a lot of margins and profitability on their product. And phthalic anhydride prices rose up sharply in between 2016 and 18, which have tapered down now. So what needs to be done now? Well, for the moment, it is an avoid, because the numbers need to come back. So let numbers recover, and let the numbers show that the company has strength. If you have bought it in and your buy price is nearby, then you have to hold. Suppose you have bought it at 70, 75, 72, then just hold on. If you have bought it at a very high level, then you need to exit. Why I'm saying that is that you could see a spurt in the stock because of a small cap run, and then you can exit later on. But if you have bought it probably 2 3 years back at a lower price, as some of the people have who have sent me the request for the presentation, I feel you can hold on to it, because things will change very quickly, and probably year and a half down the line, this stock could start performing again. The chemical sector as a whole, I have seen, apart from a few companies, is under siege, and few of the marquee stocks are doing really well. Otherwise, most of the companies are near to its 52-week low. So one needs to understand that as well. So you need to let the stock recover and then invest into Thirumalai chemicals. So this was my video on Thirumalai chemicals. Please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.